Largest U.S. union federation opposes crypto bill. Says it exposes workers' retirement funds to risk. Crypto bill. United States. AFL-CIO urges Senate to reject Responsible Financial Innovation Act, warning it exposes workers' retirement funds to crypto volatility, as Trump's order allows crypto in $12.5 T401k portfolios. Crypto journalist. Hassan. Crypto journalist. Hassan. About author. Anas is a crypto-native journalist and SEO writer with over 5 years of writing experience covering blockchain, crypto, DeFi, and emerging tech. Author profile. Share. Copied. Last updated 9 hours ago. The AFL-CIO has urged the Senate Banking Committee to oppose the Responsible Financial Innovation Act, warning that the legislation would expose workers' retirement funds to crypto volatility while increasing systemic financial risk. In an October 7 letter to Chairman Scott and Ranking Member Warren, AFL-CIO Director of Government Affairs Jody Calemine stated the bill would greenlight retirement plans like 401k and pensions to hold risky crypto assets rather than insulating workers from instability. The Union Federation represents millions of American workers whose retirement security could be affected by the legislation. The opposition comes as President Trump signed an executive order in August allowing American workers to add alternative assets, including cryptocurrency, to their $12.5 trillion 401k portfolios. More than 90 million Americans participate in employer-sponsored defined contribution plans, with total U.S. retirement assets valued at $43.4 trillion as of March 31, 2025. House Financial Services Committee Chairman French Hill and Subcommittee Chairman and Wagner urged SEC Chair Paul Atkins on September 22 to implement the directive swiftly by recognizing FINRA-certified professionals as accredited investors. Union warns bill creates shadow markets and exposes FDIC to risk. The AFL-CIO claimed to have identified 2 immediate systemic risks in the legislation. First, the proposal would expand the ability of FDIC-backed banks and bank holding companies to hold and trade crypto assets directly, rather than only on behalf of clients. This, according to them, would expose banks to a heightened risk of losses and failures, while also putting the FDIC's taxpayer-backed deposit insurance fund at greater risk. Second, the bill codifies the tokenization of securities and assets, allowing private companies to create shadow public stock outside SEC oversight. Calemine warned these blockchain-based shadow stocks, notionally tied to traditional public stock but trading independently, would create new risks for both shadow stockholders and public stockholders who did not opt into unregulated markets. The union expressed deep concern about the potential impact on the stability of traditional financial markets and institutions, comparing the risks to unregulated derivatives markets that contributed to the 2008 financial crisis. The legislation substantially weakens federal and state enforcement tools to police fraud and conflicts of interest, according to the AFL-CIO. The bill creates avenues for securities issuers to evade SEC regulation through tokenization, reduces public disclosure requirements, and preempts state-level anti-fraud, securities, and consumer protection laws. While most pensions currently do not carry crypto assets due to associated risks, Calemine claimed the bill provides a facade of regulation that may make crypto more mainstream in portfolios, allowing the proliferation of assets investors will wrongly perceive as safe. Industry pushes forward as regulators signal friendlier stance. The draft Responsible Financial Innovation Act, released in July by Senate Banking Chair Tim Scott alongside Senators Cynthia Lummis, Bill Hagerty, and Bernie Moreno, proposes explicit recognition that digital assets referred to as ancillary assets are not inherently securities. The legislation attempts to resolve jurisdictional tension between the SEC and the CFTC, with most digital assets regulated as commodities under the CFTC, while the SEC retains oversight of investment contracts and investor protection. A revised September 7 draft introduced protections for DeFi developers and emerging blockchain sectors, such as DePINs, proposing the formation of a joint advisory committee on digital assets comprising SEC and CFTC members, developers contributing to decentralized protocols, validators, liquidity providers, and wallet builders would not automatically fall under traditional financial regulations if protocols aren't centrally controlled. Airdrops, staking rewards, and liquid staking outputs are defined as gratuitous distributions, rather than securities offerings. Last month, SEC Chair Paul Atkins announced the agency would end regulation by enforcement, giving firms preliminary notices of technical violations and up to 6 months to address issues before enforcement is considered. Since taking office in April, Atkins has dropped several high-profile cases inherited from Gary Gensler's tenure and launched a crypto task force. He rejected the broad classification of cryptocurrencies as securities, showing openness to tokenized stocks and bonds that mirror existing instruments. Little before then, CFTC Acting Chair Caroline DeFi outlined on September 8 a cross-border framework allowing foreign crypto exchanges to operate under U.S. regulatory frameworks, potentially widening market access for American traders. FAM noted many American crypto firms moved operations abroad, citing a lack of clear rules, with jurisdictions in Europe, Asia, and the Middle East developing digital asset frameworks that drew companies away. Follow us on Google News. Trending news. Recommended popular crypto topics. Price predictions. XRP price prediction. Swift partners with Ethereum firm. Is Ripple losing the payments race it started? New ChatGPT predicts the price of XRP, Solana, and Pi coin by the end of 2025. XRP price prediction. World's largest exchange moves to 24/7 trading for crypto. Is this the start of full Wall Street adoption? Bitcoin price prediction. BTC hits record high as dollar collapses. Is this the beginning of a monetary reset? Solana price prediction. Upcoming technical upgrades could change everything. $1,000 SOL could be weeks away. Blockchain news. Real estate giant Opendoor to accept Bitcoin and crypto for home buying. CEO confirms. 1 day ago, by Hassan. Price analysis. Solana price prediction. Institutional money pours into SOL. Is this the most undervalued top 10 crypto right now? 1 day ago, by Harvey Hunter. Price analysis. New ChatGPT predicts explosive rallies for XRP, Solana, and Litecoin by the end of 2025. 1 day ago, by Tim Hackey. Best crypto to buy now in October 2025. Top crypto to invest in. 1 day ago, by Alan Draper. New cryptocurrencies to invest in today. Top new crypto coins. 1 day ago, by Inesis Tavares. 13 best crypto presales to invest in 2025. Presale crypto list. 5 hours ago, by Alan Draper. 15 new and upcoming Coinbase listings in October 2025. 2 days ago, by Elijah Rankovich. 12 new and upcoming Binance listings in 2025. 1 day ago, by Elijah Rankovich. The next crypto to explode in 2025. Our top picks. 1 day ago, by Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. 13 hours ago, by Leon Waters. XRP, price prediction 2025, 2026 to 2030. August 29, 2025, by Eric Huffman. Ethereum price prediction 2025 to 2030. 5 days ago, by Ben Beto.